Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about how China stocks was possibly going to be delisted based on administration. Bloomberg wrote an article yesterday regarding this news. So as I mentioned, stocks plunged yesterday, and Bloomberg reported discussions about Trump administration limiting U.S. portfolio flows into China, which caused the American markets and Chinese market to dip yesterday. So this would be the delisting of Chinese shares on American stock markets. That sent some of the Chinese tech and consumer stocks to lower sharply. And as I mentioned, the U.S. indices, NASDAQ, S&P 500, and Dow Jones Industrial Average were all in the red. So all 9 of 11 S&P 500 sectors finished in the red, especially the tech sector, which is more sensitive and cyclical. Going to the actual Bloomberg article, there's actually some updates that came out today where US Treasury officials said that there's no plans to block Chinese listings at the time. And the official said the option is not on the table at the time. And advisors are divided on path forward and possible action. So there hasn't been a consensus about what's happening with these Chinese listings on American Stock Exchange. So since there's no current plans to stop Chinese companies from listing on US exchanges, I think on Monday or next week in general, it'll be more positive in terms of the Chinese market on the American Stock Exchange. So the Treasury spokeswoman Monica Crowley said the administration's not contemplating blocking Chinese companies from listing shares on US stock exchanges at this time. And this was in an email statement on Saturday, which is today. She responded to Friday's Bloomberg News report on various measures under consideration by the US, including delisting Chinese companies from US exchanges. And this affected large companies, Chinese companies like Alibaba, Baidu, and Tencent. So if we look at those stocks on Robinhood, they were all in the red. So first stock, Alibaba, ticker symbol BABA. This is a Chinese e-commerce company. It dipped 5% yesterday. Overall, up 0.97 this past year. Past 5 years, up 85.78%. Next stock is Tencent, ticker symbol TCEHY. This was down 2.62%. Past year, down 0.27%. Past 5 years, up 173.51%. Next is Baidu, which is kind of like the Google of China. Yesterday, down 3.67%. Past year, down 55.63%. And past 5 years, down 53%. Next is JD, another e-commerce company, down almost 6% yesterday. Past year, up 10.36%. Past 5 years, up 5.44%. So overall, these Chinese stocks are very volatile. Whenever there's bad news or headlines, the stocks take a significant dip. And I think in the long run, it's good to have exposure in the Chinese market, even though it's very volatile and risky. Just because the Chinese economy is, in the long term, it's going to be growing, but in the short term, it's slowing down. And I think during the times when it's slowing down, I think it's good to have a small position that you're okay with risking. So buy and hold in long term. And I think there's a lot of opportunities for growth in the long run for some of these companies, like in the e-commerce space, in social media, and search, especially when the Chinese economy is growing in the long term. That's all for this video. Are you buying Chinese stocks? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or a free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.